May profits be upon you. Let's go over what we see with gold. Let's start from the monthly. What do I see? We see this impulse. We see this correction, right? And then we see another impulse that didn't break the highs. We saw the rejection. This is forming these railroad tracks. That's very interesting that we see this turnaround, an equal turnaround after this impulse. The impulse was corrected down to make equal lows. Okay? Whenever you see equal lows, you know that there is liquidity behind under there. What are we talking about? We're talking about people who have pending orders for shorts who want to take breakout trades, and we have people who have stop losses there for people who took longs. All right, makers want to get all the liquidity they can, so they come down here and tap it and take everybody out of both sides. All right, so we want to move through the institutional footprints. That we want to go with smart money, right? Don't we? Because that's dumb money that gets caught up in those kind of things. All right, so after this pullback, we see the equal lows, relative equal lows, and we see this rejection from there. All right, price came down here, took all of the what I call internal liquidity that's here. That's easier to see on the lower time frames. The lower we get, the better you'll see it, because there's liquidity and on at all these lows for people who took longs and people who are looking for breakout trades to take shorts. All right. And what price does is make these points as it's impulsing to go and grab these liquidity points. Got it? Liquidity moves the markets. So, and what price will do is come back and just sweep all those liquidity points. All right, what you did here. Get it? And then that will prepare them for the next move. Let's go to the daily. The next significant move. All right, let's go to the daily. Let's see what are we looking at now, right now. All right. Well, first we want to make sure we notice where is the last break of structure. Where there's a break of structure, that indicates whether price is going to keep continuing higher or lower. It indicates it's like tipping a hand. There's a high probability that price is going to continue higher. Okay, the last break of structure, actual structure, was here, right? This higher high from down here, all right, relative to these highs, relative to that high. All right, this point, this structural point was broken here. So it looked like price was going to continue higher. Okay. What did price do? Price did continue a little higher. But what is it doing? What was the purpose? I'm going to show you right now. Liquidity. Came out, grabbed liquidity, and then went in its intended direction. All right. Now, after a break of structure, what you expect is a return to impulse. The price will return to the impulsing order block that sent price to break that structure, like here. All right. You can see price reached this high, broke these short-term lows, which was awesome. Okay. And when price got down here, it equaled these lows, returned to the impulsing order block. And you're saying, where's that impulsing order block? The impulsing order block is the last up move. And I said move, not the last up candle, not the last bullish candle. Let's see, bearish. Okay. But the move upward started here. All right. This is where the buyers were in control. This is where the buying orders were moving price up. Got it? And then price revisited this order block, and it just melted. Okay. And then what are we doing along the way? Breaking short-term lows, short-term lows, right? This is actually a pullback because it had two candles on it. This is actually a break of structure here. When price breaks that structure, we expect that return to impulse. Did it return to impulse? Yes, it did. Right here. Here's your order block. Bing, right there. And then continue to fall. As price breaks structure, it indicates that there's a high probability that price is going to continue in the bearish momentum. All right. If I can just get this right. Thank you. All right. All right. So that brings us back up to here. Price broke structure, came up, but it did not close past this order block. It didn't close past it. Now, again, this order block starts here. All right. But you see how far it's got up into this order block, right? When I see anyway, price just wick past an order block, a known zone of supply, it doesn't violate it. It doesn't just take it out, and until I see a close above this point. This is just a liquidity grab, and you can see price respected this order block because it didn't have a close past it. It was milking the liquidity up here, milked it. All right. And understand we are in a larger order block, a higher and larger order block up here. All right. This is inside that. And I always love to see bearish order blocks formed at the beginning of a larger bearish order block. This is a higher time frame bearish order block, so it has more power to it. All right. But you can see how the respect is. All right. Rejected here, came back up, and again rejected. And this is the most important part. What do I see? Breaks of short-term lows. I call these short-term lows because they're not two candles, which would be a structure point. All right. On this time frame, it is minor structure, but it is a short-term low, and it's significant that price passed it. Okay. Let's go to the short-term lows. Let's go to the next time frame. Let me clean up my messes. All right, we'll go to the 4-hour and we can see this price action a little bit more clearly. All right, this is our POI, and you can see the respect that price has for that order block over there to the left that we saw on the daily. This is a daily order block. All right, I should call it that. Okay, there you go. All right, we got a D in there. All right, so what are we watching? This up move is part of the same order block, but it's again forming more selling orders. So this is going to be an order block that's going to be milked. It's going to be tapped, and you can see that happening here. Once we break, see this two candles here, right? All right, but this is not the close. This is the part of the same order block. You understand? Of this wick. Why am I having so much trouble forming words? Price came up, broke these short-term lows, broke that structural area. Now this candle didn't trade outside the range, so this doesn't count as a structural low. All right, it didn't trade outside the range of the previous candle. It didn't go lower here. It didn't go higher here. You understand? This is an inside candle. It does not count as a structure point on this time frame. Okay, but when we go past it, we have to mark. We have to mark these as short-term short-term lows. All right, and I don't think I have that here. Nope, I sure don't. So, but that is equal, near equal lows, and I have it as sell side liquidity, and price will is attracted to that. Always attracted to liquidity pools, and price will come down and tap these this internal um, liquidity, and continue down. There's a lot of it here. Do you understand? I need to point these out for you so you'll know that price has good reason to continue lower. All these low points are untapped liquidity pools that are just waiting for price to start making its way down these levels and taking out all of uh, these stops and pending buy orders and sell orders and stuff. Do you understand how this works? That is what institutions. That's the way institutions will trade. Create the market makers will make these liquidity points, driving price up to discount prices for bigger institutions to take their shorts. All right, they won't take shorts from here. Retailers will. Okay, institutions will wait until market makers give them their price, their discount price, and then they'll take their shorts, and they're going to be taking shorts from down here. Now, what do I expect from this point on gold? All right, on the 4 hour, as it shows, we broke this low. All right, and we have uh, higher highs, higher lows. What made this higher point? What made that higher high? What made it? This one did not trade outside the range. This one did not trade outside the range. This one did not trade outside the range of the previous candles. So all the way from down here, you see this? This is one leg of structure. One leg. Okay? And this is the pullback. And we're gonna pull all the way back down. And there's there's more liquidity under that. So we're going by the higher time frame target. The higher time frame, excuse me, the higher time frame target is a lower low because we just made a lower high, and that's what's expected after a lower low. Am I right or am I right? Am I right or am I right? All right. So we have this point, this low point here. We know that this is where external liquidity starts right here. All right. These structural points inside are all internal liquidity, and internal liquidity seeks the market seeks external liquidity. And when we have external liquidity, what is it going to seek? Internal liquidity. That's the way it works. One to the other, one to the other. Okay, so what am I expecting? I'm expecting further declines after a pullback to test uh, the order block up here. All right, you'll be able to see this area a little more clearly on the lower time frames. Let's go to the 1 hour, and you can see, yeah, there's an order block right there. Now, we're talking about price on this. Just look at this 1 hour, and you can see that these are structural points now, not just short-term lows. You see that short-term, that short-term. You see that lower high here. All right, and you see the break. My mouse is failing. You see the break of structure here, and after a break of structure, return to impulse. And this would be my first target for a return to impulse. This is where I would be looking for price to give me a valid entry for a short. This would be the first place I'd look. All right, so that's what I'm going to do with my mentees. We'll look for price to transition from bullish to bearish by giving us a head and shoulder kind of pattern. All right. And we're looking for that left shoulder, right shoulder, and the we want that the head and then the right shoulder, and we're looking for uh, the the transition of price from bullish to bearish momentum, and that's the plan. That is the plan. All right, we're going to be looking for that on the lower time frames. We're talking about on the everything from the once we see price hit the POI, our point of interest on the 1 hour, then we'll go to the 15, then we'll go to the 5, and we'll ultimately enter in on the 1 minute time frame for the best entry to give us the biggest risk to reward, and we'll be targeting this low as our first TP. You understand? If you're into for the swing, you want to hold on until price is taking out all of this internal liquidity, and that'll bring our low, our maybe our third TP down. This will be a second one. All right, and down here will be a third TP somewhere in this area. Okay, that's what I'm thinking about. That's what I got on my mind. Okay, so I hope you found this video informative. I hope you learned something. Make sure you leave a comment, give me some feedback. Let me know if I'm aligned with if my analysis aligns with yours, if it works with your strategy. Make sure you give a like to encourage me to keep putting out free information. Hey, be safe next week. All right. You have those big news events coming out. All right. I would uh I would suggest that maybe you should wait until FOMC on Wednesday before you take a trade, because that announcement will affect the USD, and you know how USD and how closely related USD and gold are related. All right. If we see strength coming into the USD, then it's going down, and our trade is going to be looking pretty good. Maybe by Wednesday we can get up here and get some rejection. You know, there's a couple of possibilities. What will invalidate this trade? I want to make sure you understand this. What would invalidate this trade? We break that high. We break that high, and I'll be looking at a different scenario that would invalidate their high. Matter of fact, there is these are relative equal highs, and there is liquidity up here. Price did come up here, take out that liquidity point. So I don't think the incentive for market makers is there for price to come up this way again. Not unless it intends to take out this larger weekly order block and bring price up to 1832, 1835. I don't see that. All right, I see it happening here. I'm going to look for a different trade if it breaks the high of this order block, and that's 1800. I'm going to look for a different trade if it breaks that with a close. But up until that point, I'm looking for a price to pull back and then drop. All right, I'll see you in the next video. Take care, and may profits be upon you.